Welcome back. And in our top business story, the Prime Minister of the Republic of Latvia, His Highness Valdis Dombrovskis, is expecting a GDP growth rate of 3% in the first half of 2012, after a growth of 5% in the fourth quarter of 2011. Latvia's PM made his remarks during the UAE Latvia Business Forum today, held at the Dubai Chamber of Commerce and Industry. The export growth of the northern European country has helped rank it the 21st country for ease of doing business in the world. Meanwhile, Latvia ranks 123rd on the list of Dubai's top trading partners, and officials hope to further develop the two countries' already stable business relationship. The first 5 months of 2011, trade between the two countries was worth 43.4 million dirhams. In an attempt to encourage business between the two countries, the UAE and Latvia signed on Sunday an agreement for avoidance on double taxation of income.
They do have some similarities between Latvia and Dubai. They are also a gateway to Russia, Baltic Sea countries, and we are, as you know, global gateway traders. I think this synergy would work good between both countries. We do look forward for boosting of the trades.
According to the Latvian Prime Minister, he hopes his country and Dubai will boost trade relations in the machinery, food and wood processing sectors.
We had some 14% growth in industrial production for the last 2 years each year. We had 30% growth in exports for the last 2 years each year. And certainly we are now very much looking for new possibilities, finding new contacts, facilitating mutual trade. And I do see lots of potential in cooperation with Dubai and United Arab Emirates in general. And so I also hope this forum will give its positive contribution to that.
A 1.65 billion dirham investment will help develop local talent and drive sustainable growth in the MENA region. SAP, the world's leading software solutions provider, announced details of their MENA growth plan for 2015. And as part of its development and expansion plan, the German software developer will establish a training and development institute within the MENA region. Saudi Arabia, Egypt and the UAE are currently being considered as options for the location. The strategic initiative will create 500 new SAP jobs and certify 2,000 new consultants in the next 4 years. Dr. Werner Brandt, the CFO of SAP, stated that 2011 was their best year, as their software revenue increased by 25% and their SSRS revenue grew by 17%. He further added that the company's main aim is to drive innovation in a competitive marketplace.
We intend, of course, to educate and train young people, train them in technology, train them in the way how they interact with SAP solutions, and then be ready for the market. And I think this will be a big change in the market, that we have more resources available to serve our customers and prospects in this region.
Many organizations and many CIOs that we talk to realize that skills development is a major challenge, not just in the Western world, but also here in emerging markets and here closer to home in the Middle East. And skills development is a challenge that's not going to go away overnight. It requires considerable amount of time. It requires public-private partnership, and that's what SAP is trying to do here: is to build an ecosystem or build a platform to develop skills, so that end-user organizations, the large banks, the oil and companies, small and medium-sized companies are able to better utilize IT, able to better utilize the infrastructure.
HSBC has extended its Air Miles Middle East partnership, and members are now able to collect Air Miles twice every time they use both their HSBC credit card and Air Miles cards at the same time. Loyalty management leader IMEA announced the extension to its agreement of anchor partner HSBC. The programme now provides HSBC's customers with an improved value position for the Air Miles they currently hold and all the new miles issued. A partnership such as this highlights the growing loyalty management sector within the region, as well as the importance of programs for a number of companies in maintaining and increasing their loyal customer base.
Loyalty, I mean, it's a fairly simple question. If you ask people, would they like more loyal customers? I think everybody's going to say yes. And HSBC are obviously a world brand, and you know, they understand that. And their relationship with us is a key differentiator for the Air Miles program. Within the region, the loyalty industry is expanding. People are understanding that, you know, the better that you know the customers that you have, the better you can drive business to your brands. I think so. It's important that we keep ahead of the competition. And I think the major challenge we have now, the major challenge in the industry, is really that senior management within the various brands get to understand that using the data, the loyalty data, needs to drive not just their marketing decisions, not just their tactical decisions, it needs to drive strategic thinking.
And let's now look at the stock indices across the GCC. And to further discuss the markets, we're now joined by Gaurav Kashyap from Alpari Middle East DMCC. Thanks for coming on the show today.
Glad to be here, Laura.
So it was a week filled with positive data. Tell us about some of the pricing action.
Well, Laura, of course, a lot of the build-up in the beginning of the week was related to the Greek private sector involvement with regards to their bond swaps. And once Wednesday rolled around, markets were pretty certain that we would see a Greek deal taking place. We did see about 85% in participation. It was estimated that the collective action clause would be invoked to force the remaining bondholders to take that overall participation up to 95%, and that's exactly what we saw happen. We didn't see the Euro-USD rally too much following the news because of the big piece of data that came out on Friday, which was the U.S. non-farm payroll number. Now, this piece of data is, of course, very important to the recovery prospects for the U.S. growth story, and what the number did show us was that there is a recovery taking place. Expectations were for something along the lines of 210,000 jobs to be added, when we saw a buildup of actually 227,000 jobs. The silver lining from that report was that the participation also picked up off those 30-year lows. And what traders should take from this week's pricing action is the fact that now positive data coming out of the U.S. will be more influential and more positive for the U.S. dollar. Why? Because it forces the Fed to stop acting on quantitative easing measures.
So definitely some positives to take from last week. So what about next week?
Well, Laura, the main piece of headline will be on Wednesday when the FOMC announces their rates. Once again, this is the U.S. Federal Reserve announcing their rates. Now, they're not going to be changing it from 0.25%. That'll remain unchanged. But their associated comments will be what will be driving markets this week. Once again, in his previous testimony to Congress about 2 weeks ago, Ben Bernanke was saying that the pace of the recovery depends fully on the U.S. jobs picture. And last week's data has shown a pretty strong gain. And what we can expect to see is a little bit more dollar strength in trading this week. And finally, we should probably see the Euro-USD breaking below 130 levels again.